Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's consider the technical background for gold market. General stance, as you can see, positive, and currently the major concern actually on the technical side is whether we will get two-leg retracement as we suggested on Friday, so that what we discussed in the last update, or we get straightforward upward continuation right to the 1950 XLP target and maybe even higher. So on Friday I was sure that the chance on a double leg retracement is more probable. So because the sell-off that we've got on the ADP report was rather significant. But currently I have not the same confidence as it was on Friday on this subject, just because of the fundamental background that we have currently. So I strongly suggest that you will read the vehicle report, because there you will see the vital areas for gold market right now for a bullish context. Actually, it is the same as our analysis is showing. Second, you will see the target that market expects in the perspective of the 2021. So this is what about the technical side. From the fundamental point of view, it's a lot of talking about inflation, Fed policy, and what market in general anticipated. And here I see very important speech from the Janet Yellen that she said on the J7 meeting. This speech was not announced in the mass media, at least widely. So it was mentioned in some articles, but not widely, because it was a bit in the shadow of the non-farm payrolls release. But she said very important thing. She said that she called for additional spending and supportive measures, to fiscal measures to the economies among the developed countries to keep it up. And second, she said that inflation repression, rising on inflation currently, she relates to bottleneck effect of the production that currently is recovering from the pandemic stagnation. And she said that it's temporal. So she suggests that inflation will stand around the Fed target of 2.53% in 2021. And, it still remains transitionary. So while this is important, because since we have Fed meeting ahead within a couple of weeks, on the 15th and 16th of June, it's difficult to suggest that on the background of Janet Yellen's speech, Fed will change their rhetoric and will make some adjustment to their policy. But the difference in time, just 1 week between the two statements. It seems that Fed will keep their position definitely in June, and at least within 2-3 more months for the summer. Gold still should keep the positive sentiment, positive background for action. From that standpoint, it seems that, at least today we consider it in a vehicle report and in the vehicle analysis, that theoretically it could return back to 2075 top in the perspective of the few months. We do not change our long-term view. We still think that this is the last upward effort from the gold before the major reversal. So this is the ending stage of the long-term bullish trend. But this is not the bullish trend continuation. And we intend to keep an eye on possible bearish signs and patterns that could be formed once market will return back to the top. But for short-term trading, this is important fundamental background that suggests that gold indeed could proceed higher. Currently, guys, if you will carefully take a look at the technical picture, you will see, on the daily chart that we are considering, you will see that, it is not very vital currently whether market will show the second leg of retracement or not. Just because in the current point and 1890 level where market stands right now, you actually have no choice but just to wait for a better entry price, at least on the daily chart. Why? Because if you take a position right here where you hide your stop, the nearest point where you could do this is somewhere below the 1855 support. But in this case, your risk-reward ratio to the XOP barely will be positive. So, yes, it has some positive ratio, but it's very small. Perfectly, your stop should be actually below this area, because this is vital area for the short-term bullish context. It stands in confluence, daily oversold, 1870 and 1825. And from that standpoint, actually, if you're trading on the daily and you haven't traded our brand body trade on Friday, that we discussed actually has been completed already, so you do not have the position from the 1855, you actually have no choice but either to wait for a deeper retracement on the daily, if you trade on the daily chart, or trying to use more risky setup on the intraday charts that I will talk a bit later. So, what the chances to get two-leg retracement? Currently, I suppose that this chance stands less than on Friday, but still we have it just because on Thursdays, you know, we will get another challenge from the CPI numbers, and if the previous inflationary numbers were strong, including the numbers from the non-farm payroll release, which is the hourly earnings, that shows also significant level of the inflation, it seems that the coming CPI report also could provide significant inflation numbers, and that potentially keep chances on two-leg retracement. So if you're trading on the daily chart and you would like to go long on the gold market, well, for you, it's probably the only chance to get the position is to hope that CPI will be strong and gold could form some kind of the ABC type of action here. That's what about the daily. But at the same time, we have some indirect levels and signs that could let us to get the direction a bit earlier, and then some setups that you could try to use on the intraday charts if you have missed the chance to buy with the brand body trade at 1855. So on the 4-day time chart, the first level that you could consider 1910. In case if market will break it up, it will be great confirmation of the bullish conditions and significantly decrease the chances on the second retracement. Just because market will break all the resistance levels that exist here, it will form the bullish reversal swing and it return back to the broken channel. That will be positive. Actually, here as you can see also strong reversal on the MACD lines. This will be the confirmation of the possible upward continuation, and in this case it will be possible to consider taking the long position with the 1950 target of the daily XOP. This is the first level that we need to keep an eye on. Second, we need to keep an eye on response of the market to the support areas that we have on the hourly chart, and particularly to the 1868 lows. Here's, by the way, you could see how our hand shoulders has worked. It's just nice. This is the target of the brand bar that also has been completed. So, first of all, most probable that market, if it show the pullback, this is very good level to consider. It's 1880. If market will able to reach it, and later it will able to stay above the 1868, in this case, this is the setup that you could consider for position taking. It's a bit more risky, not as attractive as on the daily chart. But as you understand, to chances that market will hit 1870 and 1825 on the daily chart stands even lower. So here, this is another setup that you could consider. For instance, if market will show the pullback to the 1880 and it will be able to stay above 1868 lows, that also will be the sign that chance on upward continuation are greater, and maybe market will not show the second leg of the retracement on the daily chart, I mean to the downside. So these two things that could help us with the decision making through the next week. And also, as I said, keep an eye on the Thursday's CPI report. This could be really important for gold market as well.